Hello, welcome. What can be said about this Trump trade syndrome that we're in? Let's dive deep into it and show you what we've been up to and what I see going on here, real quick. So, first and foremost, we'll get into looking at some of the stuff for the live trade room you guys wanted to see, the algos. And it's always good to see what's going on. First and foremost, with the ATR, that's the average true range, providing bar lengths such as close to, what would you say, 60, 70 points every. This is a 5-minute chart. A lot of these trade signals in the S&P are outside the scope of the major default setting of risk that we put in the settings, which I'll share with you here real quick. If you humor me, edit studies, we're going to look at, edit strategies, would you? Thank you. Customize, here we go. We can take a look. Our max trade loss, this is like the emergency stop, is set at $1,000. So in other words, if a trade gives the parameters of 3-to-1, 4-to-1, whatever the settings are per buy signal, if it's more than $1,000, it's not going to enter into a trade. It's automatic. And so in this custom time period, we would have to alter the parameters. Let me show you something that we have a test model going on that accounts for higher volatility. This is a 5-minute queue that we're using in the live trading room. I'll share that with you in a minute. But I just wanted to point out, this is a model that starts trading at 6 o'clock in the morning. And it is got a decent back test study, just made another new equity high. But the bottom line is, when we get into the settings and you take a look at what is your risk factor, you're talking, you have to risk per trade on this one approximately, where did I put it here? $2,000 is the money management. So it's double. So you have to increase your risk double on every single trade. So again, the ATR has increased, or more than likely doubled in the last 2 weeks, average true range. So some of these bars, if you take a look, like I was just sharing with you, this is tough for a day trader coming right in the open at night, the open outcry. We've been seeing this type of volatility for the first 30 minutes. And, whether it's a report that comes out, or a Trump statement, or a Truth Social post, whatever it is, it's causing extreme volatility. And I don't know if you understand, even trading at micro, which is 1/10 the size, I mean, it's kind of hard for a lot of people to navigate close to a 60-point S&P range in 5 minutes. That's a 5-minute bar from high to low. So you get a buy signal without stops, you're just going to get crushed in this market. And again, you'll have some good signals and trade setups, and like this one demonstrated. All right, let's get into what the real thing is that we do in the live trading room. Currently, we added, thanks to a new member who said, "Hey, I trade the queues, John. Can you build me a queue system?" And for the last week and a half, we built this particular system on the queues. Let's just take a look at it. This was a brand new build out. It's been live in the room. And since we did it live in front of everybody, this is a performance. Green dot signifies a new equity high. Now, it doesn't look like it's made a lot of money. I get that, because this is a cash ETF. It's no leverage. And number two, if we take a look at the max drawdown of $200, it's outrageous. It's pretty darn good. It's amazing, actually, if you look at the risk versus the reward and what it's up. Return on initial capital is only 3%. Again, this has only been working for the last week and a half. The buy and hold return, of course, the NASDAQ and the Qs are down 7%. But this particular strategy, as I was pointing out to, only trades based on a $25,000 account. And that's why it only does like 50 shares. You see this, 52, 52, 52. So every time it trades, it's saying, give me in as many shares of the Qs as my $25,000 account will handle. So it's not doing leverage. If you wanted leverage, you could do QID, but you can take the signals, right, and manifest that, and that's what's promoted in the, or at least it's projected in the live trading room on the board. So you can see there's two Qs. and one is the 5-minute model, and one is a 60-minute model. Now, we have another one that should not be running. It's another test model that we're doing on a 10. That's why it says test. So I'm going to just close this real quick. Close the test workspace out. Save changes. No, we didn't really do anything that needs to be saved. So let's just take a look at what's going on. Now, this Q 5-minute model, it's not in a position, but it says long 60-minute model. So the 60-minute model is long, and that's where it differentiates the intervals so that our clients and our trade community doesn't get confused as to which signal's which. It's like, oh, brand new signal generated, which model is it? Oh, this is the one it is. Okay, so all of that, every time a trade is populated, it shows on the chart, the position, the size, the entry. It's done by arrow to the side where the entry was made. It shows the bar it was made, so it's got a triangle and an arrow up. All right, so this is a little bit confusing for the market to be short one model and long the other in two like-in-kind ETFs. One's the S&P 500, one's the Q. What does that signify? Well, the Q's was short. The S&P's is still short. The reversal did not happen on the S&P. It was still in a trade. The NASDAQ covered a short position and reversed and went long. Now, this I've seen happen. One of two things can happen. This is going to get stopped out tomorrow, and we didn't by design do this. This is just the freak of the nature of the markets, and to tell you how weird things are with the mega cap weighted names and different strategies on their timing of entries. But overall, the performance, if we look at the strategy performance, I'll just share with you the graph quickly. This just made another new equity high last week, and it's just not really been doing a whole lot, and it's not calibrating the last trade because it's not out. So TradeStation doesn't know if this is a winner or a loser. So if it's a winner, obviously we're going to see another uptick in the performance. In the NASDAQ strategy that we run in the live trading room, it did just generate a new equity high, and it's just been dancing up against that equity high right there. And obviously we'll see what's going to come out of the market. So that's the overall conflicting. I mean, this is a strong reflection of the confliction that we see in this marketplace. And I'm just going to go into a couple things that I think we're getting ready to see some turns. Looking at the PMC reading, there's two things that I want to see happen in the market. And I'm going to go and use the futures first and foremost. So if we take a look at the ES, and we're going to look at a 60-minute model real quick, and this will help illustrate the daily person's pivots. One of the things, this is, let's double check. I'm going to switch over just to make this a quicker analysis. This is the SPY model. I already teed it up. It's a 1 hour using, again, the daily person's pivots. If you'll notice, it's been targeting lower high, lower low, lower high, lower low, lower high, lower low. One day it had a higher high and a higher low. The market did rally and failed, generated a sell signal, broke pivot, back down to bear market, bear market, bear market, bear market, bear market. What do you think we would want to see if we finally could see a bottom in the market? A, we want to see volume pointing up like there's a buy signal. And B, I'd like to see the pivots demonstrate more than one day of telling me with a person's pivots of a higher high and a higher low. Quite frankly, we don't have that. So is the bottom in on the SPY? No, I don't see that and can't make that call whatsoever. What I can say is that certain stocks are starting to show maybe some bottoming action. Now, bottoms come in several ways. Bottoms come in lows, retesting a low, taking out the prior day's low, rallying, and then coming back and being very choppy and chewy. And this is Netflix. Netflix has come in pretty significantly. There's a couple trades that we're looking at that I think today did give us a little ray of hope because the volumes were insane. This is a company called CrowdStrike. Earnings, it had overbeaten down on its earnings reaction. Another one was MongoDB. Beat the top line revenue, beat EPS, gave positive guidance, but its earnings growth was slightly a couple percentage points below the prior year first quarter, and they punished this with an ugly baseball bat. They just beat it down over 26%. But I think what we're seeing in the market is it overreacted, and I think what part of this market meltdown was that a lot of maybe hedge funds were using leveraged positions, margin money, and were overexposed in the AI trade as well as maybe semis, and that created this big cratering as they all have to go sell at the market. Meanwhile, you get guys with trillions of dollars. I mean, guys, if you combine them, probably close to over $1 trillion between Warren Buffett, Ackerman, David Tepper, Steve Cohen. If these guys say, hey, I want to just be in cash and I don't find any value, who's catching the falling knife? It isn't going to be John Person and John Q. Public, that's for sure. We're no match for those guys. So that's what I think the market went through, maybe an extreme upside, and people went on a ballistic momentum ride and used leverage, and now they're paying the piper on that. Eventually, we're going to see markets calm down and give a better risk reward ratio. Marvell is one, but Trump's not helping, and I'm being honest, Trump's not helping. Marvell, part of what they make are semiconductor and devices, sensors for the automobile industry. If you ever get a brand new car and it says, hey, you need service, it's memorizing that you need maybe an oil change, or it's sending updates of software updates. And those signals and that type of communication and that technology, Marvel's a part of that. So if you sit there and you come out with a tweet and say, or text, we're going to impose tariffs on any imported cars in Canada, well, that means the market freaked out, thought a little ahead of this and said, if it restricts sales of cars, you're going to restrict the need to build cars, and therefore you're not going to need the components, and one of those would be like a Marvell. So, I mean, I'm not saying right or wrong. I'm just saying that is the connect the dot. Another thing that I think that you all deserve to hear about that I'm not sure if it got any traction, but it makes a lot of sense to me. If you have people, government workers that were working from home but had licenses, and if you own Microsoft 365, it's like almost per computer. So if you're at a home office, your office, if it's in a different name, like XYZ Corporation, it buys the license and it's at that computer at the office. Your employee goes home, he has a desktop, and then he has maybe a company laptop. Maybe he needs 2 more licenses. So now one employee has 3 licenses of a software product, and if you either let that employee go or tell that employee you got to work back at the office, no more laptop, no more desktop at home, now you've overstated your gains and your subscribers. And I'm not saying it's Microsoft, but I think that chatter is certainly circulating that might be one of the reasons why the inflated government spending created a big drive in some technology names under the Biden administration. And you take that all away, and you could clearly see, man, this looks like an overhanging umbrella. We are at a person's quarterly support target, but this volume action doesn't tell me that I want to catch this falling knife. At least, maybe short-term traders can do it, but something looks disastrous, like we are rolling over for a bigger correction longer term. Something has to change in the market. So I'm not suggesting that Microsoft's going to crater this week, but I am suggesting it certainly broke a long-term support, and the longer the support and the bigger the breakdown, the bigger the decline is coming. And the volume, according to on-balance volume and even my own proprietary indicator, is not looking too wholesome. So this might not be as supportive to the S&P 500 as some think. So we might see some more relative weakness in the days and weeks ahead. Not to say we can't get a dead cat bounce first, but I do think as long as the negative volume presides, as long as the trend is lower low, lower highs, as long as we can't reverse this pattern that's in the downtrend right now, reverse it by maybe going back up, creating an uptrend, so to speak, this market has a little bit of a problem. Apple has the same thing. Let's take a look at some of the heads of the 5 families, and I'll let you go just for a warning. Once again, we're at a major support zone. That's the last conditional change support, that white line in the sand. It's interesting. There's a pivot support right there. Volume just got shredded. Everyone's liquidating. And if you do break this support, this last bastion of support, the next level you come down to is 195. After that, you're talking 165. After that, you're talking 125. So there's a lot of support levels along the way. And for Apple, this is another one on a long-term basis. Nobody was, that's why maybe Warren Buffett got out of his particular trades. Last but not least, let's take a look at Google, Googl. Look at the Class A shares. So looking at this from a longer term perspective, we'll start with the daily chart. We haven't broken a swing low yet. The volume is picked up a little bit, so it looks like some people are nibbling in here on possibly an institutional level. Big time traders aren't really convinced yet. We haven't turned a hook. When this volume indicator turns positive, that's when you know that there's a more consistency in buying under the market. Right now, it looks like some bottom pickers, but they could be very nimble traders. Buy it today at 162, be out tomorrow at 159, and maybe reverse and go short their position. And so a regular retail trader might have a hard time following that. This is best to watch for another day or two. Last but not least, let's look at the almighty. And it would be NVIDIA, of course, NVIDIA. Now, NVIDIA's, everyone's seen the shaken ads on CNBC, get out of NVIDIA. To be honest with you, I mean, maybe that makes sense at 147, but there's been some great trades and we've taken some really good action out of that trend up there. Relative to everything else on the board, this is holding up really dynamically well, if you think about it. The other one, AVGO, Broadcom, incredible earnings, incredible guidance. This is the epitome of data center build-out stocks right here. And for the week, we are the week's not over, but we formed a doji against old highs, which means there's a little bit of indecision. Buyers aren't sure they want to add, and sellers aren't sure they want to get short in the hole. So the moral of the story here is we're starting to see a little bit of nibbling as well in Broadcom. I would say we've got some numbers coming out this week with inflation. We got more Trumpism tweets coming out. We need better direction on what we're doing with these tariffs and how it's going to maybe help calm the markets if they can explain, listen, these tariffs are about fentanyl. That's what we all heard originally, and securing the border. Now it's manifesting into, hey, if they impose more tariffs on us, we're going to go even higher on them. That's a tariff war versus, hey, we told you guys, clean up the border and clean up the fentanyl trafficking. And we're going to remove these tariffs. But I personally have not heard that out of the Trump administration. And that, if you remember, good, bad, or indifferent, I'm just saying this is what the market's listening to. And this is why it's getting very nervous. And markets, when they get nervous, they don't go up. They get shorted, especially when they're at dangerous, lofty valuations. And that's just the regular idea of what I see here happening in the market. Is AI done and over? No. Is Broadcom done? Obviously, somebody liked buying it over the last couple days in this dip here. So we should follow that. That's probably, out of all of them, one that has the best technical conditions left in the market. Other than that, gang, we need more clarity, and I will update these videos when we see that clarity, and I thought you just deserved to hear it straight from the horse's mouth. What does the market look like from here? What's the winners? What's the losers? And I'll tell you right now, there could be a little bit more pain ahead unless we get resolution on inflation, interest rates, and fiscal policy from the Trump administration. And then if we do, things will be all right. I personally think that we could see the PPI, that's the producer price, not the consumer. I think if we have seen inflation come in by cutting off government spending, because that's what drove the producer price index over the last 6 months. And if we see that coming in on Thursday's report, not the CPI on Wednesday's report, but again, if we get at least from a government spending perspective, and it drives the PPI a little bit lower, that'll be kind of a supporting edge for the market as we head into the next week. And by midweek and option expiration, we could see some recovery. Last but not least, one of our members in the live trading room pointed out that on the Russell, for the April 17th expiration. Thanks, Trev, for that. And I thought I'd pass it on. For the April 17th expiration, the 205 strike calls were traded something like 42,000 volumes. So it looks like some trader was looking and hoping that maybe we see a recovery or a dead cat bounce out of the Russell between now and April to get back to where the market was say Thursday, okay, last Thursday. So odds are they're looking for a little bit more of a recovery out of the Russell, the IWM. It is, after all, fallen all the way back down to old resistance. And usually old resistance turns into new support or could cause a market to just have a little bit of a dead cat bounce. So follow that if you'd like, and I'll be back with an update hopefully by Friday. Have a great trading rest of your week, and thanks for joining and watching. If you like what you hear and you like the analysis, give a thumbs up. Make sure you get subscribed so that you can get these updates when we do them for the YouTube